The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, here on TFNN. Check us out, TFNN.com, Tiger TV, 9 hours of live radio and video. You can watch the trader screens these days. We talk about things, walk through the charts, and look at the markets. Also, make sure you go over and check out TFNN.mobi and listen to us while you're on the go. So let's check out where the markets are at right now. We got the S&P, and it is currently with about 7 points on the day. And bringing up just a few different charts here that I'm looking over. And we also may be able to go in. Maybe we'll even do some trades. We'll see if we get a chance here, okay? We got the Russell is up 3.8. We got the NASDAQ up 23. We got the Dow up 73. Copper is currently down about 0.5% right now. We got gold is only down a mere point on the day. Of course, that's just from settlement. Doesn't always tell the whole story right there. We got silver down about 0.5%. We got natural gas up almost 0.5%. We got oil up 50 cents right there. Corn is up over 1%, up 6 points a day. Soybeans moving up over about the same amount in percentage-wise, but at 19. We got the euro dollar. Let's currently looking at the euro dollar, and it's down about 45 pips. We got the Aussie dollar up 5. We got the pound dollar is currently up just a mere 15. The dollar franc is up 41. The dollar CAD is down 70. U.S. yen is currently up 11 pips with Aussie yen up 12. And the euro yen is down 25 with the pound yen up 37. And then looking over at the euro pound, it is currently down 32 pips on the day. All right, so we wanted to look through a few different things that we've been talking about here. And just going through, I talked about yesterday, I went through some of the news setups that were coming up and what you could do with them and different ways that you can trade them. And so I want to open up those charts and walk through them with you step by step, okay? So let me post those. And we'll just get a really basic chart on here to begin with. And let me pull it up. All right, so we got the pound. And let me open this one up right here. And that'll let us see basically just where the pound was and how it moved in relation to the news announcement last night. And once that loads up, there we go. We'll go through it and see, what were the moves, what were the deviation moves, what the trade worked out that we talked about yesterday. And we'll catch on up to today, and we'll talk about tomorrow as well. And let's see here. So here we go. We got the pound announcement. You can tell where it's at. You see that big volume spike right there. By the way, I'm pulling the futures Forex volume. I'm pulling 6B on my charts. And let's see here. So that way I can actually get some real volume whenever a trade happens. Goes on down. It makes this move. Moves about 50 pips or so from the release right here. That's like right before the release to the low. And then from a release to, if you take that to 7 a.m., what do we get? Right over here. Got about 39. But if you take it back to, remember I said you want to start out in this trade, we're looking for 40 to 50 pips. And at least, and I said you want to start out around midnight on the trade. You get a lot more premium. And check it out right here. If you started at midnight, only 12 pips off, you would have got a nice, profitable trade. Would have worked out really, really well for you. And it's really simple. You put it on, and you basically go to bed. You literally just buy, the lower spread, sell the upper spread, do the iron condor, the 7 a.m. expiration. And again, this is just based on the preliminary GDP that's coming out. And, doesn't necessarily have that big a move. So we really didn't expect, more than, 40 pips. And so we really wanted to just, take advantage of it, looking for a $30 to $50, profit on the trade. And so if you would have got in there for about 40, 45, then you easily could have pulled off, that profit goal. And like I said, not a lot of work and really easy for you to manage and take care of. And, you don't have to set it to charts. You're actually not even really looking at your charts that much, except for just making sure that you got the right spreads. And then you put it on. You set, now you can set take profit. So if it bounces around, you can take that profit a little bit early. And that could be a wise thing. So, it may fly up here and it takes profit, right? Actually, it trailed on up, and you can actually end up taking that full profit easily. And then when it runs back down, you can actually take this profit, and you're not holding the thing all the way till 7 o'clock. And that can actually be a wise choice, because I've seen them bounce like that and then end up going in one direction. Like it flies up, takes profit on the long, but then flies down, takes profit on the short. But if you wouldn't have taken profit, maybe it flew up, you didn't take profit when you could have, and then it flies down, and now you end up losing on your long. And you made money on your short, but did it cover it? I mean, you would have had about 100 pip, move where you had been okay on the trade. But pretty simple. Condors, if you haven't check out some of my archives over there on Tiger TV, Channel 7, and be able to, help get you going and understanding how to, put all the different pieces in place for you to be able to do these trades. If you don't already have it, make sure you hop over, grab yourself an account over at Nadex. You can go to nadex.com, and then you can click on trading, and then what trading account. That'll get you started. And you want to go in here and put in username, first name, last name, phone number, email address. Click apply for demo. And once that is complete, then check your email. You'll be able to log right in, and you can actually start playing with these trades, learning how they work. Take advantage of the education that's available and that's offered by them. Hop over on our site, over at TFNN. We got the scanners that make things really easy. And just, when you're ready, create an account. If you're ready, you're only going to have a couple weeks on that demo. If you want to get that demo extended for a year, all you have to do is fund an account. And the funding requirement is only $100. And as long as you place one live trade, it doesn't matter if it's a $3 risk trade or a $500 risk trade or whatever, okay, one trade, win, loss, whatever, then you can email them or call them, and they'll extend your demo out for a year for you. So that way you can, sort of get your feet grounded and have all the pieces together so you don't get hurt, by just jumping in and doing things that, you don't know what you're doing yet. We've all been there. You got to start somewhere. And demo is a great teacher, actually, despite many, I think, false opinions out there about demo. I think it's one of the best places you can go, because you can learn the rules, you can learn the platform, you can learn the execution, you can get down the muscle memory of how to act. It's not going to have as much of the emotion, but if you'll treat it like it, some of the suggestions I tell people are, bring your demo down to your actual deposit, whatever you're going to put in. So bring it down to that size. I also tell people only trade the real size you're going to be trading. Only trade real trades that you're going to be trading, and make yourself make a certain amount in demo before you trade live. And that makes it real. That last rule, okay, if you'll make it a real, like, whatever I'm going to deposit, I want my account at that size. And whatever size I'm going to trade, I want my account at, that's how many contracts I'll trade. And then now I have to make X dollars before I can trade. And it's not that you won't do a few trades, but if you'll make it like that, where you can't really go full throttle on your trading system until you've made X amount, then all of a sudden demo gets a lot more real. Because when you lose, you're losing the ability to go out and make money because it's slowing you down. And but again, it's about to be rule-based. It's all about discipline. And to me, the number one thing is so many traders want to hop in live and they want to get their experience from the market, which is a very expensive teacher, and then they wonder why they don't have money left to actually trade with. And I think that right there is a telltale sign. It's like if you don't have the discipline to figure things out a little bit first, you're not going to have the discipline when it comes to live trading. You're going to not take stops. You're going to take positions you shouldn't. You're going to go against your rules, and you're going to lose. And it's going to be your fault. It's not going to be your system didn't work out that day. It's not going to be it was a hard day in the markets. It's going to be you just didn't follow what you knew to do because you didn't have the discipline to do it. And if you're gonna lose, don't let it be because discipline. Let it be because it was just a rough day in the markets. Okay? Don't let it be more than your allotted risk amount. Again, let it come down to the markets. That's how you're going to have to trade. Day in, day out. It's inventory. You're going to have inventory coming in. You're going to have inventory going out at the end of the day, at the end of the week, at the end of the month, at the end of the quarter. You want more inventory in than out. But don't let it be because, you didn't stick the milk in the fridge whenever it came in. You know what I'm saying? Like, that shouldn't be why you're losing the money. Have the discipline, follow the rules. You do the things that make sense. Let's see here. Don't forget, we do have the monetary policy statement coming out tonight. Somewhere, between let's say it was 10 p.m. Let's look at it. We'll double check on the monetary policy statement over here. And they don't really tell you. You have this little list of, there's various yen announcements coming out. But right over here, just checking the times. Should add to some good volatility, actually. 10:50, 11, 11:30. Yeah, so basically, but somewhere between 10:30, to 11:30, you should be looking for, yen policy statement. And that will, of course, move the markets. So, and it may surprise you when it does it. And just, you want to be aware of it and make sure you have risk management. Don't be surprised if you're in a trade if it pops up 20 or 30 ticks or more against you. And so it's just a wise thing to be aware of. And or may go straight in your favor, or maybe you're doing a breakout, or maybe you're doing maybe you're going in just collecting some premium. So a lot of ways to take advantage of it. But I just want to make sure that you're aware of it so that way you don't get caught off guard. And let's see here. That will affect, trader asked me, will that affect just yen pairs or actually affect pretty much every pair? Because yen is going to highly impact the dollar, which is going to highly impact, Aussie, Euro, franc, CAD. So actually it can easily impact all of them because they're all connected. So one big, web. Okay. And let's see what else can we document for you so you're aware of that one. And we got this one. Okay, so that's going to be somewhere around 10:30 tonight. Make sure that's on your calendar. And for about an hour or so, should be looking at that. So that knocks that one out. The other stuff, we had consumer confidence this morning. Not really the biggest trade, but we'll look at it and we'll walk through how that one would have worked out for you also when we get back. And we got some other decent announcements coming out this week, and we'll see if we can walk through some of those details after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. And we're going through just each one of these step by step and sort of laying them all out over here. So right now, one of the other trades that we're checking out is this move right here on the euro dollar. And let me throw that one up there for you so you can see it. And let's see what we got. Okay, so on the one right here with the euro dollar, and we got the 4-minute chart, and the announcement that we had was the consumer confidence. And let's see what kind of move happened on it, okay? Because it wasn't a lot. The announcement came out at 10 a.m. We expected there to be little to no movement, and so you could go in and you could straddle it for, to 11, to 12, to 1, like to 3 if you wanted to. There's usually just not a lot of movement. Like it's a day you can just sort of go flat on. If you look at the movement, even starting at the 8 o'clock, the low right here is 47 pips. But it hadn't really done much of anything. Just a really, really, really flat market. And I'm looking over at consumer confidence reports right now and just scrolling through real quick. I have a little app that I'm working on building that pulls everything for you very fast. And, 45 pips is like a big move from the announcement. many days, and we're talking end of day 15, 20. So we're at this point in the day, would not be completely surprised to see euro-dollar stay flat for the rest of the day. It would be at least its MO. And why would that be? Okay, why would the consumer confidence report, what does that tell us? It's not really about what that tells us. It's about what is coming up. It's about the FOMC statement that's coming out tomorrow. Okay? Often the markets will go very flat in the afternoon, especially the FX pairs, the day before FOMC. And so, not a big surprise. Great butterfly time, basically, is what it comes down to, as long as you get the premium. So that's why we talked about starting this morning on consumer confidence and not expecting a big move on that, so getting in right around 9 o'clock and then just really taking advantage of it. And let's see. But, yeah, consumer confidence is at 10, so, right around 9 a.m. And just go in and do an iron condor. So it's gonna, let's see, it's the U.S. consumer. I just want to log this down since we're building all this up. So U.S. consumer confidence comes out at 10 a.m. So, and then we're expecting, basically about $40 tick move. So you want to get about $40 to $50, and that move doesn't mean that we expect it to stay there. Okay, and it's really something where we expect it to go in and maybe move up that 40 ticks, but then come on back and sort of almost back to the mean, which in this case really the mean for us is settlement. And notice that's really what it's coming right back towards. It's staying right on that settlement price. And I would not be surprised to see it finish pretty much flat, maybe just within a couple ticks on that. We look over at Russell. Even Russell, is really flat right now. We had some movement. We had a little bit of movement this morning, and now it's just really, really quiet. So, just a lot of different things that you can look at as you're looking through the charts, but this is just a really simple strategy. If you'll embrace it, then you'll find a really easy way to trade, and that's just doing these simple range-bound strategies, okay? And let's see, what else do we have for the week? So that sort of catches us up right now, but what can we do that would serve us for the rest of the week? What trades we got? We have quite a few. Really good ones that we can take advantage of, and so let's look at those and make sure you're ready for them. What we're going to have is going to be really tomorrow. There's going to be a lot of stuff, press conferences coming out by Bank of Japan, all that in the morning. That's just that spillover. But then we got the ADP non-farm coming out, and we also have the U.S. GDP and the Canadian GDP and the U.S. Fed funds rate. So quite a bit is actually going to be released tomorrow, and it's a pretty heavy news day. So obviously we can cover the Fed funds rate here on the show. Let's get you ready for the employment change and the two GDP reports when we get back after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. Well, definitely have to get you ready for tomorrow, because I'm going to be out. Found out they just requested they come up to my daughter's school tomorrow. They have a program called Watchdogs, and it's basically dads. We fill out background checks, and we take all these, like, you're a good person, test and everything. We go up, basically help out, some teachers. We hang out with the principal. Our kids get to see us at the school all day. Our kid, if we do that and volunteer for that day, our kid gets a T-shirt. Add security to the school. Having some dads around and all that stuff. So it's a pretty cool thing. And, of course, my daughter is extremely excited. She's been hoping I would get selected and all that stuff. So she's very pumped up. And but I will be out tomorrow doing that pretty much for most of the day. And then, so let's get you set up and get these markets all cooking and going. All right, so what do we got? Well, tomorrow we're going to have, we talked about everything for the night. We're going to have ADP non-farm employment change. What are the expectations on non-farm employment change? We're looking at the usual move. By 11 o'clock is less than 25 pips on 9 out of the last 12. Okay? The 3 that moved about, one of them moved 60 and the other 2 moved about 70, 75. So what does that tell you? If I can get at least $35 on, say, an 11 o'clock or 10 o'clock, I guess, 10 or 11 o'clock expiration, if I get about $35 on that for a 1-to-1 risk reward, I mean, if it actually did move 70 pips, I'd be down $35. 9 out of 12 times would be profitable on the trade. That would leave me with 6 out of 12 net. So, not bad. Meaning not 6 out of 12 profitable, but 6 out of 12 net. Meaning like 3 profits took care of 3 losses, and I have 6 of them I get to keep. So we'd be looking for really, about $35 to $40 at 11 o'clock. Really, 10 o'clock would work just as well. So just, but either one of those would actually be sufficient. So we want to look at that trade, and like I said, either 10 or 11, okay? 10 or 11 o'clock, and that's going to be the ADP NFP, and it'll come out at 8:30 a.m., and that's going to come out at the same time as the 2 GDP, so I'm going to double check those for you. But we're looking for really a 7 or 8 AM entry, looking for 10 or 11 AM exits. And let me check one more thing. Like, would 9 o'clock work? So if you wanted to get like the really close, and I don't think it would as well, but it may work just as fine. Let's see here. 9 o'clock. Let's see if you got the premium. The problem is like it'll come down and go back. One of them that would have been profitable if you would have waited. Let's see here, but that's just one trade it really impacted. So, and understand it may pop like 50 pips, but it usually comes back. Okay, so that's why I'm looking like at a 70, 80 pip move before I even consider getting out of the trade. Which means about a $35 to $40 risk on the trade. So may pop I said like anywhere between 50 to 60 pips before retracing, and ideally somewhere between 35 I'd say to 55. I think that's sort of wishful thinking, but with the GDP and everything else, you might actually be able to pull it off. And so Euro USD basically barely ever breaks 60. It's done it literally 3 times in the past 12 months. Okay, and you can look for really whatever you can get there. 9, 10, or 11 would actually work fine. So looking over all the stats, whichever one you can get, it's not going to make a big difference. Just you named the additional time. The additional time didn't really hurt you that much because usually when it moved fast, so it didn't make a difference. Okay, and so that knocks out the ADP NFP report. And the other report that we have that we'll look at, we're going to have the 2 GDPs. The Canadian GDP and the U.S. GDP, advanced GDP, are coming out. And unless it's which it always could be, this is the first, big one right here. So going through, looking at, March, and I'm just looking at, what's GDP here? That's the pound. Wait a minute. Let me flip on over. I want to look at the U.S. GDP. There we go. Okay. So the final GDP, not a big move. Let me look at let's see, we're going to have advanced. Is that right? Yep, advanced GDP. And that's right here over on, Forex Factory's one site. I don't pay attention to their rankings, but I do like just the list. You can get them also. There's a ton of websites that have these listed out. Just most of the information on there is not useful in and of itself. Okay, so let's see. The final GDP, obviously not a big move. Preliminary GDP, last report actually was not a big move on Euro USD. The last advanced GDP was about 25 pips. Wasn't really that big of a move. That was the one in January. And I'm talking up to like 11 o'clock. So 10, 11, about the same. Pardon me. Now, November, it had like a pretty big move. It moved down about 50, 60 pips, but then it retraced all the way back up by 10 o'clock. And all in all, really a flat, nothing move. I mean, if you could get $35 or more for 10 or 11, you should be fine. And again, these trades seem so counterintuitive, but once you learn them, I mean, you're not going to want to go back. Looking over at the CAD GDP, it's a little more volatile on the CAD itself, but not that much. I only see literally 3 trades in 12 months greater than 35 pips. If you got it at 10, then that's 2, 1. Trying to see if there's one more or not. Wow. So maybe none here. If you get at 10, it's 20 pips on the dollar CAD. So I'd probably add that in along with my plan for just what's coming up tomorrow, the ADP and FP. And then what do we got? We got, like I said, U.S. GDP, and we have CAD GDP. So USD CAD, 30 pips easy. Okay. And I can look at, just to double check, what I'll do is I'll look at the NFP report on the ADP NFP report over here on the USD CAD. See if it has any kind of different random stat, but it looks like even with that, it doesn't really impact it that much. So some of these news trades that you'd think would just have the biggest impacts don't. Okay, so we got over here. That'll give us a plan for the USD CAD. So USD CAD, look for really 35 to 45 in profit. Okay, on that trade right there, and for an iron condor, and basically barely ever breaks 30 before 10 a.m. So look for I'd say 8 to 10 a.m. Okay, and that would give you your trade for tomorrow morning that you can take advantage of. Let's see here. Now, we got that one out of the way. What else do we got? You have your crude oil inventories. You can always trade that. Use expected ranges to help you. And let's check out the Fed funds rate, FOMC statement, all that fun stuff coming out. And what do we got? So, you never know. But volatile is usually the word. We're talking anywhere between 80 and 160 pips, sometimes 3 pips. Okay? And to, dispel some, here, let me go through this with you. This is actually sort of surprising. Okay? By end of day, euro dollar, let's see, I'm going to go through the last ones for you real quick. We got 6 pips, 20 pips, 10 pips. Now some of these moved like 30, but they came on back. Literally 0.7 pips, 4 pips, 113 pips. See, 10 after moving 51. 150 pips. That was back last September when the Fed surprised everybody. Okay, so that was obviously a big rarity. October, 30 pips after moving 70. Let's see. December, it moved basically 80 pips. It basically moved 80. It came all the way back, and by the end of the day, it moved it again. But it actually came all the way back right around, actually 3 o'clock. So it actually didn't get back down there until around 6. It was at about 30 pips by the end of the day after moving 80. January went down about 30, up about positive 20 from before release, ended at 2.5 pips. March, it's the one that we just had. Pretty big move there. It dropped straight down, retraced back about 80 pips. That's euro dollar. Okay? If we look at the same thing on pound dollar, pull that up. I'm actually looking at pound yen. there's a reason I like pound yen. It's because the spreads on the index are actually not as wide. And so you can cap that risk, but you usually get very similar, if not the same amount of premium. Pound yen only moved 26 pips last time, moved 2 before that. And I moved like 200 one day. That's insane. 40, 20, 12, 8, 2, 20, 7, 30, 11 pips. Okay, very small moves. I mean, besides like one just monster move, but you remember you have capped risk. Okay, pound dollar, they moved like 100 pips last time. 23 pips, 6 pips, 15 pips. Had that same monster move back in September, like 180. And then like it moved up 70, down, back down to 20. Had one monster move down. That was June of last year. Euro dollar had that the other big move that euro dollar had as well. Basically, they all either did it or they didn't. Pound dollar, 25 pips. March of last year, we're looking at 20 pips, 5 pips, 10 pips, 9 pips. The reason I say all this is because that you don't think that. You think FOMC is going to be huge, and it could be huge. Okay, it could be an 80 or 100 or 180 pip move. Okay. But usually it's not. Usually it's very small. And so if you go in and you straddle this thing, you're going to profit on like 3 out of like 12. Okay? Maybe actually 3 out of like 24. There are only a handful out of all the announcements I looked at there. I went back all the way to October 2012, which gave me, I don't know what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, 12. That's what it should have done. So the last 12 announcements, it had 3 trades that are profitable. And on those, the best thing you could have done was put the straddle on and just leave it alone and walk away. Because the ones that really made money would have made a lot of money. Like a 1-to-1 take profit, you would get killed if you did it. So either you need to be willing to put it on and just depend that out of every 12 announcements, the Fed's going to surprise us, and they're going to make a whole lot on those 3 to cover all the losses on the other 9. And, you probably won't have total losses, but you'll lose like 10 or 20 or 30 or 40 or $70. Or do iron condors on them. And if they have any kind of implied volatility built in, you'll be able to go in and get these iron condors on for like $80. That means the market has to move 160 pips against you. It's only done that twice in the last 12 months. Actually, only once in the last 12 months it moved that far on either one of those markets. And basically just find the most premium you can get with the most defined risk. Sometimes you might not have to put a stop on because you're already past a 1-to-1 max profit. You're probably not going to get max profit, but you're also probably not going to have max loss, at least not a majority of the time. And probabilities will work out in your favor if you would have done this over the last 12 months. They would have worked out in your favor. So I'm all about the iron condors on these. I used to be about the straddles. But I found that if it did move and I didn't take my profit, it came right back. And I'm like, wait a minute, if it keeps moving and coming back, then why don't I just do the other side? Okay? And that's worked very well. So that really is going to be your FOMC announcements. Going in, I mean, you're looking for a nice move. I'm going to give you the high to lows here when we get back. And that'll sort of let you know, like, the range to expect. Potentially on each one of these trades. Okay? So stay right there. We'll be right back after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so if you've been following along as I've been doing these trades, and sort of wish I was here to show them to you tomorrow, but if you've been following along as them, I used to do a lot of butterflies right before the news, a lot of iron condors for the news, because then it, boom, then it explode. And you know, I expect it to be flat, and it is. The market's usually very, very flat going into that 2 o'clock. And as I started watching it, I also noticed that it was harder and harder to get decent premium on it because there was really very little expectation. And so I was like, well, what is a, what's a better way? How can I take advantage of this? And what I found out was really simple, that I could go in and I could just collect premium all the way through, because the premium was so expensive, because a lot of times I'd find it really hard to find a straddle or strangle without it being just way too expensive. But I didn't have to. Okay, I didn't have to buy a straddle or strangle. I could literally go in and just trade it neutral, which sounds nuts. But if I can bring in, let's say, $35 on the long side and $35 on the short side of the trade, I can bring in $70 potentially on that trade, then my risk reward, okay, especially when it pops up and you take profit, pops down, you take profit, okay, because FOMC, it will go nuts, so I set my take profits. It has to move really far for me to get hammered. Okay, Like if I bring in $70, I'd have to move 140 pips. And so, you want to go in there and, 140 pip move against you. Just look at the spread, see what a out-of-the-money spread, could possibly, make you for when you're at that max profit. Maybe $5, maybe $10 you have to get out. I don't know. You have to look at it. Check out deviation levels to help you maybe decide when to exit. You can just hold on also. It's just there are times when it really does move. That's when you'll feel it. But if you trade it over the course of 12 months, it's just crazy simple. I'm giving you an easy trade you can do every 8 weeks or whatever. And it doesn't get much simpler than this. Use a scanner to help you find them, okay? But average ranges, if you're ready, okay, 73 pips on the euro-dollar high to low. So I don't care if it goes up 73 or down 73. If I can get close to 73, then that means I'm expecting basically break even no matter what happens, or better, okay? Now, it may explode, and that could be it, but then it'd have to move 146 for me to lose the 73 maximum profit. Pound dollar, 71 pips. Dollar franc, 65 pips. Aussie dollar, 58 pips. Dollar CAD, 52 pips. So that's my average high to low ranges. That's the ones I have pulled for you. That's 5. There are actually 10. I think 5 is enough to handle. But there are 10 pairs. And there are some pairs that are more volatile than the other ones, okay? So, I'm sure that, we'll get into developing, some additional strategies on these more volatile pairs, but what we're going to have to do is we're going to get more complex. We're going to have to build sort of a whole strategy around doing cross Forex pairs on Nadex where you make your own synthetics and, just put all those different pieces together. One of the things I was looking at doing on it with the FOMC, just because it is so massively volatile, is going in and just checking out, like I said, some of the synthetic pairs. So we'll talk about how to make your own currency by combining 2 other currencies on one of the shows this week. We got NFP and PMIs and everything else still coming out this week. Busy week. Take advantage of the news. Learn how to trade it. Get a demo account. And call in and let me know your questions. All right, y'all have a great day, and I will see you tomorrow right here on the Thursday on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.